Good morning and welcome to the Killik & Co market update. It's been another strong week for markets and the S&P 500 has achieved its 7th consecutive month of gains. Here in the UK, we're looking at the latest FTSE quarterly reshuffle. The FTSE 100 index, for example, contains the 100 largest companies on the London Stock Exchange by market capitalisation. And because market capitalisation is changing all the time, that means the index has to be readjusted periodically to make sure it always contains the 100 largest companies. And these changes on a quarterly basis can be quite interesting because they can show what sectors are doing well and which sectors are doing poorly. So this quarter there are going to be 4 changes to the FTSE 100 index, 2 companies joining and 2 companies leaving. So the 2 companies joining are Morrisons Supermarket and Meggitt, the defence company. And actually it's fair to say that neither of these companies are doing particularly well. It's simply that both companies have been bid for by US companies, and that means they've both experienced quite strong share price rises, and therefore they're now large enough to join the FTSE 100. And this is actually all a bit sad, as we have touched upon in recent videos. It's a shame to see so many UK businesses being taken over by foreign companies. And what's more, if these 2 companies do get taken over, they'll then have to be removed from the FTSE 100 index again because they'll no longer be on the London Stock Exchange. The 2 companies being removed from the FTSE 100 are Just Eat and Weir Group. Just Eat is being removed on a technicality. It merged with a Dutch rival recently, and therefore it no longer counts as a UK company, and therefore it cannot be in the FTSE 100 index. Weir Group is a provider of engineering solutions to the oil and gas business. It had a very difficult 2020 because the oil price was low and oil and gas companies really rode back on their investment in certain projects. However, the sector and Weir Group have recovered quite well. It's just been overtaken by these strong performers such as Morrisons and Meggitt. Now, when these changes to the index go through later in this month, it means that FTSE 100 tracker and index funds will have to make these changes too, and that could cause a few movements in share prices because lots of different trades will have to be placed. Best Invest have just published their latest Spot the Dog report, which is always a good read. The word dog is often used to describe investments or funds that have performed very poorly. And Best Invest put together this really good regular report which reviews the performance of funds across different sectors, and it highlights the ones that have performed well and the ones that have performed not so well. The report is freely available online, so all you have to do is Google Best Invest Spot the Dog and you'll be able to read the full report. One particular dog that has been mentioned in the latest report is the Invesco UK Equity Income Fund. This was managed by Mark Barnett, who was Neil Woodford's protege over at Invesco. As you can see by this snapshot from the fund's fact sheet, it has performed incredibly poorly over the last 5 years. It's made a negative return over this time period, including dividends, and it's significantly below its benchmark. Mark Barnett did leave Invesco last year and the fund now has new managers, but as yet we haven't seen a significant uptick in performance. So we would recommend having a read of this report and considering whether you want to take action if you do have any of the dogs that have been highlighted by Best Invest. And finally this week there have been lots of headlines about a shortage of truck drivers in the UK. Apparently we're short of 100,000 truck drivers and this is causing problems across supply chains. For example, Nando's had to close 50 restaurants because it couldn't get enough chicken deliveries. McDonald's has reported not being able to deliver milkshake to all of its restaurants. So lots of big brands are having real problems with this. Arguably Brexit is the main cause. Lots of our truck drivers used to come from the EU and many of those have returned home since Brexit. But this is a real problem for the UK because about 79% of our freight is delivered by road, so truck drivers are a really important part of the UK economy. And what's happening now is that companies are offering drivers big starting bonuses or big increases in wages. For example, some drivers have reported being offered pay rises of up to 40% overnight. The concern now is that these wage rises will feed through to consumers in the form of price rises, and that could result in inflation. We've talked about inflation concerns quite a lot in these videos over the last few weeks, but if inflation continues to rise, anyone with low return investments such as cash or government bonds is going to be even worse off in real terms. So this is really something to keep a very close eye on. Moving on to have a look at next week, it's very quiet on the calendar and we haven't got any companies reporting that are on the Killik & Co research covered list. So that leaves me to wish you a very good weekend and we look forward to seeing you next Friday.